Shares of crypto exchange operator Coinbase trading lower here today, and they've actually fallen since their direct listing. But our next guest thinks that they are a good buy at these levels. That's Owen Lau. He's Oppenheimer senior research analyst, out with the note today, reiterating his outperform rating on Coinbase. Owen, thanks for being here. As you point out in your note, you have a pretty optimistic revenue estimate for the company. It's set to report here in the next few weeks. And you're looking for second quarter revenue of $2.1 billion. As you point out, that's more optimistic than the street. Where do you think that gap is? What do you see that you think other folks are not seeing when it comes to the revenue outlook here?
Right. So first of all, thank you for having me here, Judy. So to me, the difference between our estimate and the street is, number one, Coinbase is still a new public company. So we still need to dig into the number, dig into the third-party data source to get the right data source to predict the revenue trend, in particular the trading volume. We felt like we have a pretty good sense and pretty good data source to predict the revenue. And that's what drives the difference between our estimate and the street. And again, like you point out that we see a 24% upside compared to consensus for revenue and about 11% upside in terms of earnings.
Oh, and you talk a good bit in this note about volumes coming in better than expected for the second quarter, and I would suppose moving forward. Should investors should Coinbase be trading in lockstep with Bitcoin? If you're focusing on volumes, do you think Coinbase is just getting lumped in with the decline in crypto?
That is a very good point, and that's the key point we try to make in the note. We think Coinbase should not trade in lockstep with Bitcoin because Bitcoin can be very volatile, but at the same time, because of that volatility, it drives higher trading volume. It is similar to other traditional exchanges, and we think there is still a misunderstanding in the market that people think Coinbase should trade along with Bitcoin going forward. And I think it may take time for people to understand the relationship, but when more and more quarters come out, people see the gigantic record volume and record quarter, people would start to realize that there's a huge difference between the volatility of Bitcoin and also the trading volume of Coinbase.
And, so Owen, granted, Coinbase has only been floating publicly for a few months, so that'll work itself out in time if indeed that break happens. But you guys have a table on here that has, maybe 24 companies that could be a comp to Coinbase, depending on how you want to bucket the company, emerging tech, transactions, and exchange. How do you think about it at the base level, what Coinbase is today and what story they are going to be able to tell long term about, what their business is fundamentally?
Right. So that's another good point. So right now, over 80% of the revenue from Coinbase comes from the trading. And that's why many people still compare Coinbase with traditional exchanges like CME, Cboe, ICE, and NASDAQ. And I think in the near term, it's fine. But the thing that strikes us is, yes, even though you can compare Coinbase with the traditional exchanges, but the traditional exchanges only grow top line at about 9%, but they trade around 10 times revenue multiple. For Coinbase, they grow at around 1,000% in the second quarter. Even though if you look at the next 2 years or so, it still grow at around 100%. But they trade at a discount compared to traditional exchange. So that's one thing we see there's a huge dislocation. Longer term, we believe that the management will add more recurring revenue. So the percentage of that transaction revenue to us, it should go down because there should be more revenue from staking, more revenue from earn campaign, and even more revenue from altcoins. And that would also reduce the reliance on Bitcoin.
Owen, do you think also Coinbase needs to expand its business lines, diversify, make acquisitions? And if so, what are some areas where you think that could happen?
Yeah, so we think this is very likely that Coinbase will still grow through acquisitions. because if they don't use the capital to do buyback, by the way, first quarter they generate about 50% margin. So they have tons of cash flow. And if they don't do buyback, they cannot reinvest 100% of the profit into their business. Then they have excess capital to make acquisitions. In terms of potential targets, there are like rumors out there, there are like reports out there that they may buy another asset manager. I think it's possible because it can increase their recurring revenue stream. That would also help the multiple as well. And also another area they can go after is more of the technology data provider. They acquire skill. That's another signal to indicate that they can get into more of the techie data analytics and even like crypto cloud business per se.
And Owen, lastly here, I'm just looking at your 12 to 18-month price target, $444. They're almost looking for the stock to double. If we are having the same conversation 18 months from now, how will have Coinbase reached your price target?
So I need to point out in the second half of this year, we're going to see a lot of retail adoption because Coinbase is launching their debit and credit card product. Their competitors like BlockFi, Voyager, Gemini are also launching similar debit and credit products. And I think Visa CFO mentioned in the morning that in the first 6 months, the crypto-related purchases is about $1 billion, which is like way higher than what they had in 2019. So we see that is a potential catalyst for retail adoption. For institutional adoption, even though we haven't heard any additional like MicroStrategy or Texas to buy more Bitcoin, but actually in the back end, there are more and more institutions to use the underlying technology to drive the digital assets adoption. At the same time, there are more and more asset managers scanning into this space. We have also talked to a lot of institutional investors. They have been showing a lot of interest. So to me, there are multiple catalysts ahead that can drive the stock, that can drive the revenue, and also the current price to our price target.
Owen, look forward to catching up with you after the report to see how this all plays out and beyond that as well. Owen Lau is Oppenheimer Senior Research Analyst. Thanks, Owen.